Welcome back to another episode of Uncontested Investing. I'm your host, Nate Selinsky, again, joined by our co-host, Suzanne Andreessen. And we're excited to sit with you guys today and have a conversation. We just had Yvonne Kenny come through the studio. It was a great interview, Suzanne. She knows her stuff.
Boy, does she.
I think the audience is going to learn a lot from that one.
Absolutely.
The next stage of our episodes is going to be a conversation between you and I. We're going to fill in the cracks of where Yvonne really didn't touch on. Most of that episode was really about scaling, growth. Yes, she definitely hit some other areas of our foundational episodes. But for right now, what we want to talk about is building a strategy as an investor, right? It's going to be the buy and hold versus the fix and flip, and then weighing the pros and cons of when to move to multifamily and what that decision kind of looks like. So I'm interested to hear your thoughts. You know, when we're talking about building a strategy, talking with investors, anything comes to mind to you initially about strategies, where to start? What does that look like for you?
Well, the industry has definitely changed since its inception. All the assets were feeding in from default servicing many years ago. And, since then, those assets have dried up. They're fewer and harder to come by, few and far between. So I think if you look at, the acquisition strategy on the fix and flip versus buy and hold, those are two very different arenas. Although I've definitely seen more people who were traditionally just in fix and flip, and because the assets are harder to come by, they're, I'll say, skimming off the top on those that they think they can make a solid investment on rental strategy. So I think they go and buy and hold instead of fixing and flipping. And down the road, maybe they'll determine whether they want a different disposition strategy. But I think they're funding that through lack of assets right now.
Mm-hmm. Yeah, I think both strategies can really work depending on the investor, depending on where they operate in the country. But I always go back to like the HGTV of it all.
Sure.
They made flipping such a popular thing. And people that got into the industry are like, okay, if I'm going to be successful, I have to do fix and flip. I have to follow the mold of what I saw on TV, what those people are doing, what's popular right now. But if that's not really what works for you, if that doesn't jive with your strategy, where you are in your career, where the asset is in terms of its life cycle, what kind of work it needs, fixing and flipping for the sake of fixing and flipping can sometimes be very detrimental and set an investor back. So that's an important thing to consider, right? Taking the asset at face value and realizing what work needs to be done, or is it ready to be rented out to a tenant?
Sure. I mean, if you look at if we take a step back there, where you look at an asset it's the life cycle of the asset. You're really at a Y in the road. Is it a fix and flip or a buy and hold? And that really makes a determination on what you do to the asset. For a buy and hold, you tend to focus more on durability, repairability, and the resident experience on what, but also have the attraction of perhaps granite countertops or a durable floor, or the making sure that you've picked the right cabinets and hinges that can withstand a little more wear and tear. But then when you go into fix and flip, if you're putting that same granite into a neighborhood that is Formica or marble,
Yeah.
You got to know your market, and you can overdo your spend, and you won't get the return on investment when you go to sell it. So there's definitely key pieces on how you want to manage that, and Yaman certainly touched on that, on how to selecting the flooring, selecting the pieces that roll into that, and then the repairability and warehouse and proximity to the investment location. So there's a lot of pieces that go into that that you have to really pay attention to as you go down that path.
I think that's a really good place not only to start, but to, exaggerate on and really focus on, I guess is the right word. There's a lot that goes into this, right? There's a lot of nuances in the industry, a lot of different things that people need to be aware of. Neighborhood, as you mentioned, even down to the countertops, right? Like, what's the trajectory of the neighborhood, right? Are the prices going up? Are they going down? Is there an influx of people moving into this neighborhood? Are there an influx of people moving out? So the investor, the onus is really on them to do that research. Yes, it's good to have a strategy, but that can go out the window depending on what market you're located in and what that area really needs from the investor rather than what the investor needs out of the property. I think that's an important distinction for investors to realize that's actually out there.
But even, when you get into that, it's what partners or that you've selected to work with you. You've had Dwellsy on, you've had Jonas on a couple months ago, and he talks about the rental and understanding the rentals and what the value is, and being able to accommodate a vacancy. So if every 1 month vacancy you have, you could have dropped your rental payment by $150, $200 a month. So you have to figure that piece out. But there's other avenues, to study the market, figure out, how are you going to evaluate that strategy? And do you go out of the MLS? And are you using a real estate agent, or are you going to sell it yourself? So there's pieces that go into that on the fix and flip side as well, on what is your plan? And any plan can work as long as you've done your homework on getting to it.
And it really comes down to experience as well. I think one of the biggest things that we try to convey to investors on this show is never get discouraged, never get bogged down if one investment doesn't go your way, if the strategy that you employ isn't really clicking at this point in time. Experience can cure everything, right? Time in the industry, making those networking connections, all the things that we talk about every episode, those things take time to materialize. So if you don't get it right away, that's not cause to give it up, say, oh, I tried and failed. I'm done. I'm going to, wipe my hands of this minor loss and, go back to my 9 to 5. There's a lot of work that goes into this. Time. Experience is the winner over time.
You can get discouraged, but you also, depending upon the size of your portfolio, one bad investment could be catastrophic if you don't go about it the right way. And understanding, how you're going to, what happens if you have a vacancy rate, or what happens if it doesn't sell in time, where before you've got a note due, to your funding partner, and make sure you've selected the right terms on any of that, whether you've got what type of, is it a 203K loan? Is it a long-term fund?
Yeah.
What are you doing? And I think they need to understand, how to go, do their worksheet, make sure that it balances out in the end, and make sure you've left enough time for those mistakes. Because you can't, you don't want to say, like you said, throw the towel in and walk away from it. But as you're starting out, it's critically important that you do the right thing as best you can, and don't overspend, and don't put the right time of estimation for completing. What happens if your flooring is not readily available? What does that delay do? So those are pieces I think you need to, as you select your partner, your flooring partner, your cabinets, your counter, make sure you've got a strong commitment and trust in that relationship, so that you can actually move forward with it.
Yeah, the phrase a buy box sometimes get talked about on this show, but I like the way you put that. You try to be an experienced investor as quick as possible. But what a buy box is, for those that are unfamiliar with the term, is having a set of parameters for each investment, right? Not coloring outside those lines. So if I'm going to invest in this property with these numbers, this is what's going to lead to success. When you start getting outside of those numbers, buying a property that's a little bit too expensive, putting in a little bit too much rehab, your margins start to evaporate pretty quickly. So you want to avoid that at all costs. And that buy box is really what sets the guidelines for your investment plan or strategy going forward.
And we've seen a lot of the REITs are more stringent in that buy box category. It either it works for them or it doesn't. And I think, and sometimes to their benefit or not, the smaller investors have a little more fluid in that strategy, and they're fuzzy on the boundaries.
Yeah.
And I think, it's more emotional. I need this for my portfolio versus it works or it doesn't. And so you have to figure out what your stance is and always stick to it. And I think, and sometimes, as a smaller investor, you can make it work maybe a little bit better than the REIT that's saying it has to be a 7.2 cap rate or wherever they're going after for their buy box. That you want to make sure that the asset that you're buying, that it works for what your goals are.
Yeah.
And I think, and you can find, the emotional, don't let the emotion get in your way of thinking, I guess is the best way to put it.
Yeah, and it's not a one size fits all, which is kind of the point I was trying to make earlier with HGTV making fix and flip such a popular, sexy option for newer investors. But it's really what works best for you, and kind of boils down to what type of work you like to do. We were talking just before we press play on the cameras here of, it's almost like left brain versus right brain when you're deciding between a fix and flip versus a buy and hold, right? There's two different strategies there. Fix and flip allows you to be a little bit more creative, get you that quicker return on investment. Whereas the buy and hold, there's a different set of parameters. You got to find tenants. You got to be able to either hire a property management company or be able to manage those tenant owner relationships, right? Because you're going to probably have a lot of turnover. So you got to be able to find different tenants, find that common ground, find those relationships. So do you just like the nuts and bolts and making the repairs and selling it? Or do you like forging those relationships, having the long-term passive income? There's really, like you said, that why, that fork in the road,
Pick the
and the
path.
investor has to pick that path. Exactly.
It's important. It is.
RCN Capital offers flexible loan programs designed to help wholesale partners close their clients' deals faster. From fix and flip properties to long-term rentals, new construction, and multifamily investments, we provide your clients with the funding solutions they need. With competitive terms and a quick approval process, we make it easy to focus on growing your business while we handle the financing. Learn more or apply today. Click the link in our bio or email info@rcncapital.com. Let RCN Capital help take your wholesale deals to the next level. And then I think one of the other things worth hitting on is who to hire for help. Finding not only just the solution for that one problem, but the solution for your career as an investor, I think is an important thing. It's never too early to network. It's never too early to remember that business card, remember that person's name. General contractors, we hear that word tossed around, or that profession tossed around a lot. Those people can actually be on your team as an investor, right? They'll pick up the phone if they know, oh, wow, this investor just moved into this zip code. They're buying up a bunch of properties. I may be able to clear my schedule a little bit and make their investment properties a priority because they're giving me a steady flow of income and work for my employees. So those relationships, it's never too early to foster those.
So when we were chatting earlier with Yvonne today, she talked about, having your partners and making sure, that they have the product availability they have, and that it's intuitive on what they have, and that you have to trust them. Yvonne has it in her warehouse. And but does your partner say they have it, or is it readily available? So those are the key pieces on how you get to the finish line. And do you have, are there the appliances readily available? Because you could be getting down to the finish line, and all of a sudden you've got 3 weeks because something's not available. And it's also important, and especially when you're doing the property management and the turns, you have to, if you got a new tenant coming in and they're expecting to occupy on the 15th of the month, and all of a sudden, and they've got their moving truck coming, and their family's coming, and the kids are starting school. So you have to be able to ensure that it's completed in time. And those are pieces that you can't overlook.
Yeah.
The tenant, I shouldn't say the tenant, the resident experience is paramount to a successful strategy.
For sure.
And the more you keep them in place, you have no vacancy. So it's much a better solid investment.
Yeah. And I think there's always that conversation, right, of shopping around versus building that relationship. So that can save you that time that you're talking about, rather than spending a week, 7, 8, 9 days on trying to find the best deal, the lowest price. Just go forward with an affordable option. And then over time, because you built that relationship, the efficiency just goes through the roof. And that's where you save your money, right? It's not penny pinching on every deal. And it's like, okay, this guy's quote is for $2,400. This guy's quote is for $2,325. But if it took you an extra 2 weeks to find that lower quote, was it really worth that time, right? So making that balance is massive for investors to understand early on.
And we touched also earlier today on membership organizations. There's several out there. You've got the National Real Estate Investors Association. You've got the National Rental Home Council. You've got the National Private Lenders Association. Those are opportunities for you to connect with like-minded folks. Mm-hmm. There's going to be the smaller investors that's a buy and hold, and the smaller investors that's a fix and flip. And while they may be in your neighborhood or portfolio footprint, you can consider them a competitor, but they also can be a network on who do you use for this? Yep. What success have you had for that? And I think that the competitive nature is not as aggressive in this space, other than perhaps in the acquisition phase of that. Yeah. But I think once you're in the same field, everyone needs it to work. You can't have a certain town, Norwalk, Connecticut, all of a sudden has a negative connotation for rental, that whatever is happening, you always want to keep that positive environment, regardless of who you are. As a competitor, you are all in the same footprint. You can all support each other. And Yvonne talked about it. She brought up her competition today, mm-hmm. But still felt that there's space for there's enough space in here for us all to work together.
And that's maybe a good place to start too. If people are uncomfortable with that at first, those national councils that you mentioned, or those national trade shows, those are the best place to find people, because you can guarantee that somebody somewhere in the country is at the exact same stage as you. So if you're both meeting at a conference in Vegas, but you work out of Connecticut and they work out of Florida, now that's a much more approachable situation, right? Rather than somebody that's one town over or right down the street that's trying to accomplish the same goal. So you're more apt to find those networking partnerships at those national shows because people are willing to help. They're at the same stage or maybe a little bit ahead, maybe a little bit behind. They can give you knowledge. You can, pay it forward and be a mentor for other people. So there's a lot of opportunities out there for not only hiring help, but finding networking people that can help you along the journey.
Sure, sure.
I think it's worth jumping to multifamily as well, because that is a big part of this industry. You've got a nice little portfolio going, maybe 4 or 5 fix and flips, couple 30-year long-term rentals where you're just generating passive income. A lot of people always talk about making that next step, making the big jump to investing in multifamily. There's a lot of benefits, but there's a lot of risks. Where do you start when that conversation comes up?
So, I mean, there's a couple, I would look at it two different ways. For the smaller investors, you've got, 5, 10 assets in a particular zip code or neighborhood. That may be your next consideration is adding in a multifamily in that same environment, subsidize what your current portfolio is. And there's some pros, there's pros and cons. You can have a lot of vacancy or in a multifamily, or you could have, it's easier to tolerate one vacancy out of 20 units than have, 4 all of a sudden, vacancies from that perspective. Or if you've got 20 units, you've got similar atmosphere where you can go and paint them all exterior at the same time, or make sure that all the plowing, for winter months as we sit here in New York in December or January, you sit here and you have to keep up with that. And so that your property management now is in a more concise environment and probably more cost effective. And if you're adding that to your early single family rental portfolio in the same or near town, you're making it a better decision on how you expand.
Yeah. I think there's always a time and place to jump on that opportunity. But as you mentioned, you have to not only consider the asset you're going after, but the overall health of the current portfolio that you have, right? So if you have 10 properties that are churning out monthly rent, month over month, year over year, okay, you can go after a potential 22 unit property where you're right. Maybe it's only 50-50 right now with vacancy versus, tenants actually living in them. And it'll take some time to secure other tenants. But with the portfolio strength that you have at your disposal, you can withstand that and be a little bit more aggressive, right? If you maybe only have 3 fix and flips, maybe that 20 unit property where there's only 7 tenants renting it out currently is not the right time for you to be making that jump. So it's circumstantial, like most things that we've kind of talked about in the last 15-20 minutes, but extremely important to consider.
Well, and that buy box is still there, but you've just added another level to it. So you're now you've got if you've got 15 units occupied out of 20, how long can you cover those 5 vacancies? So you need as you do this, you need to make sure that you've put the time frame and the expense in mind. And what are you going to do to capture those tenants? Are you in a market that and why are they vacant? Is it just because they need to be internal rehab, or are you and there's enough people in that market that rents are having a demand? So you need to figure out what the rental is, what the market is, what the demand is, and how can you keep up with that strategy. And then again, we touched on putting the right product in there. Maybe you go and put a granite countertop in these units because it's more attractive, and then your units have a higher value in the rental strategy against some of the other folks that have the Formica countertop or whatever you happen to choose.
Yep. And I think there's always that point in an investor's career where they maybe think they need to get to the multifamily stage to be considered successful. But I think that was one of my favorite parts of the conversation with Yvonne when she talked about competition, like you mentioned, customer reviews, taking like pride and ego out of the situation, extracting it, and being able to be real with yourself, like, okay, I'm just not ready, or I don't have the experience. I don't maybe have the partner yet that can help me fund this deal. It's not just, okay, you get to a certain point in your investing career. Now you need to go to multifamily. It needs to be that right opportunity. You can always find somebody that can maybe help you fund your first one, right? If you're a little bit you have a little bit of trepidation about am I really ready for this? Find a partner, find somebody
Yeah.
that maybe is in the same stage as you, going through the similar things. There's so many local, we talk about national networking events. There's so many local networking events of, they're in the same stage as you. They're looking for that first multifamily. All right, if we're both looking for a multifamily, why don't we do it together? We get that first one under our belt. We both profit from it. And then maybe we go our separate ways after we gain that experience from that initial first transaction.
But when you talk about both go your separate ways, or at any disposition strategy, you need to have your plan in place for that. Are we 50-50 owners, or what's the investment? What's the buyout? Has there been a committed buyout? Who gets it when you decide to do that? You need to have all that figured out up front, because I think that's also critical. That it could sink just as easily as it could rise.
Yeah.
REI Inc. is the premier monthly publication for real estate investors. Dive into a wealth of expert insight and strategies from industry leaders and gain valuable regional market insights, ensuring you always have the best information at your fingertips. Visit rei-ink.com to elevate your real estate investment game today. And that's important.
And when we're talking about benefits versus risks, right? One of the most appealing things about owning a multifamily, obviously, is more tenants, more rent, more money, more income every year, right? With that, though,
More headache.
Thank you. Yeah, you read my mind. We're getting this co-host thing down pretty quick. But you're right. It's more headache, right? There's more potential. You can have 19 perfect tenants. That 20th could be the pain in the butt for everybody else that lives there. Doesn't treat the unit the right way. Doesn't treat the neighbors the right way. So
goes out of town, floods the bathtub, and the 7 downstairs tenants now have to, take that as an issue.
Yeah.
So and those are the pieces that you have to look out for.
Yeah. You're taking on more risk, right? So it's not to say that you should avoid that, but you should consider that when you're doing those types of investments, right? Can I afford to have one bad apple? Can I afford to have one unit, potentially, I don't want to say get destroyed, but become unlivable, where now you have to go in, fix that whole unit, make it as presentable as the other ones that are in that multifamily space. So another layer too that I was thinking of when we were doing notes for this was, there's a legal aspect to it, like a zoning.
Sure.
A single family home on a nice neighborhood can be way different than a 30 unit in the middle of the city, right? So it's going through the proper channels, the local government, whatever the case may be, right? You got to make sure that you're crossing your T's, dotting your I's, because there's a lot more logistics that goes into owning a multifamily than it would be like a single family.
Sure. And so let's look at, you've got a single family and you allow them to have a pet. And maybe they have a pit bull. The likelihood that the pit bull is going to, go out and bite somebody outside of the yard is less than having 20 units with someone having a pit bull, and the 3-year-old down the hall from that gets nipped. So there's there's pieces and legal aspects that you have to look at differently on what you're providing as an allowable alternative for these residents to have, and you can get there is pros and cons in every scenario, truthfully, and I think just map out how many cons could negate the pro strategy, and make sure you can tolerate them.
Yeah, and I think that's the most important message, right? We can go back and forth playing conversational tennis all day long about the pros and cons of this strategy, of that strategy, when to do this, when to do that. It all comes down to the investor putting the work in themselves, right? You're going to get out what you put in. So if you put in research ahead of time, you've got the area dialed in, you know what investment works for this neighborhood, you go out and you execute a plan. But if you start just buying properties just for the sake of expanding that portfolio, having that title of being a real estate investor without doing the necessary research, then you look up and you're like, okay, I've got a couple successful ones, but the ones that I didn't do the research on are causing me all the headaches.
Sure.
I'm making some nice money, but I'm flushing it down the toilet managing these other ones where I didn't do that vetting. I didn't do that research. So there are tools out there. There's people out there.
There's all kinds of technology.
Yeah.
There's, look, do your research. I mean, there's rental analysis you can do. There's acquisition analysis, renovation strategies. Make sure that you've looked at the whole picture on whatever your plan is for that asset. And then, it can be successful.
Yeah.
I think, people can build a retirement plan if they go about it the right way.
I think for a while, people considered Zillow, Realtor, and sites like Redfin even as the end-all be-all. These sites are going to tell me whether this investment is right or wrong. But with the rise of AI, you mentioned there's so many products out there, if you're just willing to put in a little bit of research, that can help you short term and long term on, is this the right investment? Is this the right area to be investing in? What are the trends? So there's so many different avenues that you can go down now. The rise of AI is such a hot button topic, but it can really be helpful if you're using it the right way.
It is. And it'll help you in a very short term do better analysis.
Suzanne, and I think that's a great first place to stop with our foundational episodes, this new era of uncontested investing. Our audience can stay tuned next week. We're going to break down choosing the right market for expansion, but in terms of building the right strategy, managing the benefits and risks of multifamily investment properties. I think we were pretty thorough there. I hope the audience enjoyed this first conversation with Suzanne and I. So we'll see you all in the next one.
See you next week.
Thank you for listening to Uncontested Investing. Questions about today's episode or the podcast? Email podcast@rcncapital.com and make sure to follow REI Inc. magazine on LinkedIn and Facebook and RCN Capital on Instagram, LinkedIn, and Facebook. See you all next time.